All right, let's get more on where rates could be headed with CNBC's own Rick Santelli. Rick, it is great to see you. I want to start off with where Tim sort of left off in terms of we're not the only player in terms of dictating where rates go. There's a whole global rates market. The German 30-year, for instance, hit its highest since 2011 just yesterday. So there's a whole other dynamic going on. Where do you see rates headed if we are to be lower by 150 basis points?
Well, I have some charts, but before I get to those, I largely agree with Tim. I don't pay as much attention to the 30-year, whether it's in Japan or whether it's in the U.S., but it is a long-dated security, so we want to pay attention. I'm paying mostly attention to 10s, but Tim said kind of sideways to higher. I couldn't agree more. Whether you look at the UK, whether you look at the EU, whether you look at Japan, the U.S., the reason long rates are going to stay stubbornly high and what we all share in common is debt and deficits, and that will mean issuance. And bond yields turned around in the last couple of days for exactly that reason. Now, I have a couple of tricks on why I think rates are going higher. Let's go to the whiteboard. All right, here's 10-year yields, and here's one trick I always like, midpoints. Okay, so if we look at 470 in April of 24 against 362, key bottom. The average there, the midpoint there is 416. If I keep the 362 and look at 479, the midpoint there is 420. 416 is the red line, 420 is the blue line. It's been somewhat magical. I would think that we're going to hold above that and mostly sideways. Any close for a Friday for a week below 416, make it even 415, that would reverse my case study for higher rates. All right, now let's go to one of the tricks that I like to do, and that's the 30 minus 10 spread, affectionately known as the knob. It is now the widest since SEP of 21. Let's call it 4 years. And when those spreads widen out, that usually tells me rates are going to be high on the long end. But it isn't only the 30s minus 10s. It's also 10s minus 5s, known as the fight spread. Same scenario. At 47 basis points, it's the widest it's been basically in 4 years. So we have wide spreads, we have key technicals, simple ones, along with moving averages, that this sideways is a good congestion level to build on. I think in the end of the day, curve steepening's the way to go. I do think 2-year yields are going to come down, but I don't see 10s, 20s, or 30s following the game. Melissa Lee, back to you.
So you think that finally we're going to see sideways to higher. But for so long, we didn't trade on the fear about deficits, about all this issuance coming. And so now it's going to hit when we're actually lowering rates?
Well, why not? After we started this year, the lowest close we had is 4%, and it bounced off there big time, big time. Show a year-to-date chart. You'll see that 4% spike. So to me, yes, what it says is that we're not necessarily going lower. How much we build is going to depend. And I do think that it isn't necessarily going to be inflation that's the biggest driver of the long end. I don't really buy the stagflation argument. I think we're going to have lots of whiffs of it, but in the end, I'm kind of with Rick Reeder here. I see good things bubbling up. I see the offsets that you've all been talking about. I do think the economy is going to be cooking in grease much better than many think, and I think that's another reason the curve steepens and the long end goes higher.
All right, Rick, good to see you. Thank you so much.